Before we begin, a quick but important disclaimer. I am not a licensed financial advisor or insurance agent. This presentation is for informational and educational purposes only and does not constitute financial or legal advice. The insurance landscape is complex and varies by state and individual circumstances. You should always consult with a qualified and licensed professional before making any decisions about your insurance coverage. All information presented here is based on publicly available data and research as of the time of this recording. You're sitting at a red light on a perfectly normal Tuesday afternoon. You're thinking about what to make for dinner, or maybe about that email you forgot to send. The light turns green. You take your foot off the brake, and in that split second between a stop and a start, bam, the world lurches forward. Your head snaps back. It's the unmistakable gut-wrenching sound of metal crushing metal. Someone glued to their phone has just plowed into your rear bumper. Your neck hurts, your heart is pounding, but your first thought, after the initial shock, is a small sigh of relief. At least I have insurance. But that relief, it's temporary. Because what comes next is a journey into a special kind of corporate hell. You call the 1-800 number on your insurance card, the company you've paid faithfully on time every single month for the last 7 years. You're greeted not by a person, but by a cheerful, soulless robot. Para español, oprima el número 2. You navigate a maze of automated menus, pressing 1 for claims, 4 for auto, 7 for a new claim, screaming representative into the phone, only to be told the current wait time is 47 minutes. When you finally get a human on the line, they don't sound like the friendly neighbor in the commercials. They sound tired, overworked, and they treat you less like a valued customer and more like a suspect in a crime you didn't commit. They ask you the same questions over and over. They tell you to get 3 separate quotes. They tell you the body shop you've used for years isn't on their preferred list. Every step of the way it feels like a battle. It feels like they are actively trying to find a reason to pay you as little as possible or nothing at all. Does this sound familiar? If it does, you are not alone. A recent study revealed a staggering statistic. Nearly 40% of American drivers believe their own insurance company will try to lowball them on a claim. Think about that. We are legally required to buy this product, and almost half of us are handing over our hard-earned money to a company we fundamentally do not trust to have our back when disaster strikes. It's a broken system. We're paying for peace of mind, but what we get is a monthly bill and a mountain of anxiety. But what if there was a company that operated on a completely different model? A company whose name doesn't get plastered on football stadiums or blasted in Super Bowl commercials every year, but consistently, almost boringly, ends up at the very top of every single major customer satisfaction report, year after year after year. A company that J.D. Power has awarded highest in customer satisfaction among auto insurers in the New England region for 11 years running. A name that, when you mention it to people who have it, they don't just say it's fine. They get a weird little smile and say, oh, they're different. They're great. That company is Amica Mutual Insurance. And in this video, we are going to do a deep, unfiltered dive into what makes them so different. This isn't a sales pitch. This is an investigation. We're going to peel back the layers and look at the good, the bad, and the potentially deal-breaking ugly of Amica. By the end of this presentation, you will know with confidence whether Amica is the real deal, a true partner on the road, or if its legendary reputation is just clever marketing. We will break down their real-world pricing and see how it stacks up against the giants like Geico and Progressive. We'll explore their coverage options to see if they're just basic, or if they offer unique protections you can't get elsewhere. We'll uncover the hidden discounts that could save you hundreds of dollars a year. And most importantly, we will expose the truth about their claims process, using real customer stories and insider data to answer the one question that truly matters. When that text-and driver plows into your bumper, will Amica really be there for you? And finally, we'll look at the one big red flag, the one major downside to Amica that might make it the absolute wrong choice for a huge number of Americans. To understand why Amica is even in this conversation, you have to understand one fundamental word that separates it from 99% of the insurance companies you see on TV. The word mutual. Most of the big names, Progressive, Allstate, The Hartford, they are publicly traded corporations. They have a legal fiduciary duty to their shareholders on Wall Street. Their primary goal, dictated by law, is to maximize profit for those investors. And how do you do that in the insurance business? It's a simple, brutal formula. Collect as much as you can in premiums, and pay out as little as you possibly can in claims. Every dollar they don't pay you for your totaled car is a dollar that goes to their bottom line and boosts their stock price. Your crisis is their profit margin. It's a fundamental conflict of interest baked into their very DNA. Amica is different. Amica Mutual Insurance isn't owned by Wall Street. It's owned by its policyholders. If you have a policy with Amica, you are, in a very real sense, a part owner of the company. There are no shareholders to please. There are no stock prices to pump. The company exists for one reason and one reason only: to serve the people who pay the premiums. The customers. The owners. You. This isn't some new age trendy business model. It's actually the old way of doing things. Go back to 1907 in Providence, Rhode Island. A man named A.T. Vigneron looked at the insurance landscape and saw a system that was built to benefit investors, not drivers. So he and a small group of people got together and created the Automobile Mutual Insurance Company of America. The idea was radical in its simplicity. What if we just pooled our money together? And if one of us gets into a wreck, we use that pool of money to make them whole again? And if, at the end of the year, there's money left over in that pool, we don't give it to some fat cat investor. We give it back to the people who paid into it in the first place. We give it back to ourselves. That concept is called a dividend, and it's something we're going to talk about a lot, because it's one of Amica's most powerful and often misunderstood features. For over a century, Amica has operated on this principle. Instead of spending billions on celebrity endorsements and funny commercials, they've focused on service, and they've returned billions of dollars back to their policyholder owners. But does this old-fashioned customer-owned model actually work in the 21st century? Is it a utopian dream or a financial nightmare waiting to happen? High customer satisfaction scores are great, but what if their prices are double everyone else's? What if their technology is stuck in 1995? What if their legendary service is just a myth perpetuated by a small loyal fan base? That's what we're here to find out. In the parts to come, we're going to put this century-old company under a modern microscope. We'll start by breaking down their coverage options, from the standard liability and collision to the unique add-ons and signature packages that you need to know about. Then we'll tackle the biggest question on everyone's mind: the cost. We'll run quotes for different driver profiles in different states to see, in black and white, how Amica's premiums compare to the competition. After that, we dive headfirst into the most critical piece of the puzzle: the claims experience. This is where the rubber meets the road, and we'll separate fact from fiction. And finally, we will cover the pros, the cons, and that one major drawback that you absolutely must consider before you ever think about switching. This is your ultimate guide to deciding if the insurance world's best-kept secret is the right secret for you. So let's start with the good. The really, really good. Because when you peel back the layers of Amica, the first thing you discover isn't just a pro. It's the very foundation of their entire reputation. It's the reason they've survived and thrived for over a century, and it's something that most other insurance giants can only dream of claiming: legendary customer service. Now I know what you're thinking. Customer service? Every company says they have great customer service. It's the most overused, hollowed-out marketing phrase in existence. It's become corporate wallpaper. But with Amica, it's different. It's not just a talking point. It's a verifiable, award-winning, policyholder-celebrated reality. To understand just how different it is, I want you to imagine a scenario. It's a Tuesday morning. You're on your way to work, maybe sipping coffee, thinking about that big meeting when suddenly, bam! Someone runs a stop sign and plows right into your passenger side. Your heart is pounding. Adrenaline is coursing through you. Your beautiful car, is a mangled mess. You're okay, thankfully, but now the dread sets in. You know what comes next. The phone call. You pull out your phone, your hand still shaking, and you dial your insurance company. You're put on hold. You listen to that awful tinny music for what feels like an eternity. Finally, a voice comes on, sounding bored, distracted. You have to explain your story 3 different times to 3 different people. You're transferred. The call drops. You have to start all over again. You're treated like a number, a policy ID, a problem to be processed. By the end of the call, you feel more stressed and angry than you did right after the accident. That experience right there is the industry standard. It's what millions of us have come to expect. Now let's rewind and run that same scenario with Amica. You make the call. A real, empathetic human being answers, often on the first or second ring. They ask if you're safe. They guide you step by step through what to do next with a calm, reassuring voice. They don't rush you. They listen. They assign you a single dedicated claims representative who will be your point of contact through the entire process. You have their name. You have their direct extension. You're not just another claim number in a queue. You're a person they are there to help. That is the Amica difference. And this isn't just my opinion or a few feel-good anecdotes. This is backed by an avalanche of data. For years, Amica has been playing a game of King of the Hill with the J.D. Power Customer Satisfaction Awards, and they almost never get knocked off the top. We're talking about the J.D. Power U.S. Auto Insurance Study. For over 2 decades, Amica has consistently ranked number 1 or in the top 2. Think about that. For 20 years, while other companies have fluctuated, merged, or changed their marketing slogans, Amica has just kept delivering. They also dominate the J.D. Power U.S. Auto Claim Satisfaction Study. This is the big one. This isn't about a pleasant sign-up process. This is about how a company treats you at your absolute worst moment, right after a crash. And year after year, Amica comes out on top. It's an almost boring level of consistency. They are the Tom Brady, the Michael Jordan of insurance customer service. So why? How do they do it? It comes down to their structure, which leads us to the second massive pro. And this one directly impacts your wallet. Amica is a mutual insurance company. That might sound like boring industry jargon, but I need you to lean in because this is critically important. Most of the big names you see advertising during the Super Bowl, think Progressive, Geico, Allstate, they are publicly traded stock companies. They have 2 primary masters: their customers and, more importantly, their shareholders on Wall Street. Their legal fiduciary duty is to maximize profit for those shareholders. This creates a fundamental conflict of interest. Every dollar they pay out for your claim is a dollar that doesn't go to their bottom line or to a shareholder's dividend. Their incentive at its core is to take in as much premium as possible while paying out as little as possible. Amica, on the other hand, is a mutual company. It is owned entirely by its policyholders. That's you. You are the shareholder. There is no Wall Street to answer to. There are no quarterly earnings calls to sweat over. Their one and only master is you, the customer. Their success is measured not by a rising stock price, but by their ability to serve their owners. This completely changes the dynamic. It aligns their interests with yours. And this isn't just a philosophical difference. It translates into actual real money back in your pocket. This is the single biggest financial pro of being an Amica customer. The dividend policy. Because Amica is owned by its policyholders, when the company has a good year, meaning they took in more in premiums than they paid out in claims and expenses, they don't just hoard that profit or give it to executives. They give it back to their owners, to you. This comes in the form of an annual dividend check. For a typical auto policy, this dividend can be up to 20% of your annual premium. Let me say that again. Up to 20%. If you're paying, say, $2,000 a year for your auto insurance, you could get a check in the mail for $400. Just for being a customer. It's not a gimmick. It's not a temporary rebate. It's a fundamental part of their business model that has been in place for over a century. This changes the entire equation of shopping for insurance. You might get a quote from another company that's $100 cheaper for the year. And you might think, great, I'll save $100. But with Amica, after you get that 20% dividend check back, you may have actually come out hundreds of dollars ahead. It forces you to do the math and think long-term. This dividend isn't guaranteed, it depends on the company's performance, but Amica has a remarkable track record of paying one out every single year for decades. It essentially acts as a loyalty and good driver reward rolled into one. The company is incentivized to run efficiently and you are incentivized to be a safe, responsible policyholder, because at the end of the year, you share in the success. It's a powerful, symbiotic relationship that you simply do not get with a traditional stock company. Beyond the world-class service and the unique dividend program, Amica also shines in the flexibility and quality of its coverage options. They aren't a bare-bones, cut-rate provider. They offer a robust suite of products. For auto insurance, they have their Platinum Choice Auto Package, which is essentially a buffet of premium features bundled together. This includes things like full glass coverage with no deductible, a chip in your windshield, they fix it, no questions asked, no money out of your pocket. It includes identity theft monitoring, a service that can cost hundreds of dollars a year on its own. It includes prestige rental coverage, meaning if your new SUV is in the shop, they won't stick you in a tiny compact car. They'll put you in a comparable rental. And one of the most valuable features is their Good Driving Rewards program. Unlike other programs that just track your every move with an app, Amica's system lets you earn advantage points for things you're already doing. For having a good driving record, for taking a defensive driving course, for referring a friend. You can then bank these points and if you ever have an accident, You can use them to pay your deductible, potentially turning a $500 or $1,000 out-of-pocket expense into zero. It's a proactive loyalty system that gives you more control. So when you put it all together, the undisputed best customer service in the industry, a unique ownership structure that aligns their interests with yours, and a dividend policy that can put hundreds of dollars back in your bank account every year, the case for Amica looks incredibly strong. Feels like a no-brainer. But as we said at the beginning, no company is perfect. And the very things that make Amica so great, their focus on service, their mutual structure, also create some significant limitations. There are real reasons why Amica isn't the right choice for everyone. And one of those reasons is a potential deal breaker for millions of Americans. And that deal breaker is surprisingly simple. You might not even be able to buy it. While Amica is licensed to operate in almost every corner of the United States, their physical presence and their appetite for new customers can be very selective. This isn't like Geico or Progressive, who seem to have an office or an advertisement on every street corner, hungry for every single driver they can get. Amica's growth has been slow, methodical, and deliberate for over a century. They don't carpet bomb states with advertising and call centers. Instead, they grow organically, ensuring their service infrastructure can handle new policyholders without compromising the quality they're famous for. This means that depending on your specific location, you might find that getting a quote is easy, but getting local agent support is impossible. For people who want a face-to-face relationship with their insurance agent, this can be a non-starter. Furthermore, as of the making of this video, there is one state where you simply cannot purchase an Amica auto policy: Hawaii. So for our viewers in the Aloha state, the conversation unfortunately ends here. But for the rest of the country, this selectivity leads directly into the second, and arguably most important potential con: the price. Let's be blunt. Amica is often not the cheapest option. If your number one and only priority is finding the absolute lowest possible price on your auto insurance, you can probably stop watching right now and go get a quote from a budget carrier. You will almost certainly find a lower number. But the story of Amica's cost is far more nuanced than just, it's expensive. The price you're quoted from Amica is one of the most revealing data points you can get, because it tells you exactly what the company thinks of you as a risk. See, Amica has a very specific type of customer they are looking for. Insurance companies call this a preferred risk profile. Think of it like a private club. Amica wants to fill its club with members who are the least likely to cause problems, in this case, file claims. So, who is this ideal Amica customer? Typically, it's someone with a clean driving record. No at-fault accidents in the last 3 to 5 years. No major violations like a DUI or reckless driving. They also heavily favor drivers with good to excellent credit. Now, using credit scores in insurance pricing is a controversial topic, but it's a reality of the industry. Insurers have mountains of data suggesting that people with higher credit scores are statistically less likely to file claims. Whether that's fair or not is a separate debate, but it's how they calculate risk. The ideal customer also often owns their own home. This suggests stability and responsibility. They might be a bit older, more established, and have a history of being continuously insured with no lapses in coverage. If you tick all of these boxes, great credit, spotless driving record, homeowner stable history, you might be shocked to find that your Amica quote is not only competitive, but it could even be one of the cheapest you receive. Why? Because you are exactly who they want. They are pricing your policy to attract your business. They know you are a low risk and they want you in their portfolio. However, if you fall on the other side of that line, the story changes dramatically. If you have a recent at-fault accident, a speeding ticket or two, a less than perfect credit score, or you're a very young driver with a limited history, your Amica quote will likely be eye-wateringly high. It might be double or triple what you get from other carriers. This isn't an accident. It's by design. That high price is Amica's polite way of saying, we don't think you're a good fit for us right now. They're not a high-risk insurer. They don't have special programs for drivers who need in-state Route 22. By pricing those risks so high, they effectively filter out the applicants they don't want, which keeps their overall pool of insured drivers safer and less costly to manage. This, in turn, allows them to provide that incredible customer service and, more importantly, it funds the single most misunderstood and powerful feature of their policies, the dividend. And this is where the entire conversation about price gets turned on its head. Remember how we talked about Amica being a mutual insurance company, owned by the policyholders? Well, what happens when a company like that has a good year? When they take in more money in premiums than they pay out in claims and expenses? A regular, stock-based company gives that profit to its shareholders. But Amica has no shareholders. You, the policyholder, are the owner. So they give that profit back to you. This is called a dividend payment, and it is a potential game changer. Here's how it works. When you have an eligible Amica policy, at the end of your policy term, the company's board of directors looks at their financial performance. If they had a profitable year, they declare a dividend. This is typically a percentage of your annual premium. For decades, this dividend has historically ranged anywhere from 5% all the way up to 20%. Let's put that in real-world terms. Imagine your annual premium with Amica is $2,000. A competitor quotes you $1,800. On paper, the competitor is $200 cheaper. Seems like a no-brainer. But let's say Amica declares a 15% dividend that year. 15% of your $2,000 premium is $300. At the end of the year, Amica literally mails you a check for $300. So what was your actual effective cost for the year? It wasn't $2,000. It was $2,000 minus that $300 check. Your real cost was $1,700. Suddenly, Amica is now $100 cheaper than the competition, and you got their world-class service. This is the secret weapon in Amica's arsenal. It's why you cannot simply compare the sticker price of an Amica quote to a quote from another company. You have to consider the potential dividend. Now, we need to be crystal clear about a few things. This dividend is not guaranteed. Amica is very careful to state this. If the company has a bad year, maybe a series of major hurricanes leads to massive claims, they might pay a smaller dividend or no dividend at all. It depends entirely on their profitability. However, their track record is incredibly strong. They have paid out a dividend every single year for over a century, a streak that is almost unbelievable in the modern business world. So, when you're evaluating Amica, you have to do a little mental math. You have to ask yourself, is the initial premium something I can afford? And am I willing to bet on the company's long-term stability and profitability to potentially make my total cost lower in the end? For many people with that preferred risk profile, the answer is a resounding yes. They see the higher initial premium not as a cost, but as an investment in a well-managed financial club that pays them back for their good behavior. It's a completely different way of looking at insurance. You're not just a customer paying a bill. You're a part owner sharing in the success. This fundamentally changes the relationship between you and your insurer. They are financially motivated to keep you happy and to operate efficiently, because it means more money back in your pocket. But a great price and a fancy dividend are meaningless if the company isn't there for you when disaster strikes. The ultimate test of any insurance company isn't the quote or the sales process. It's the claims. And Amica's claims process has a reputation that's almost legendary. But it also has a surprising dark side that you absolutely need to know about before you sign on the dotted line. Let's talk about the moment of truth. The one moment that defines your entire relationship with an insurance company. It's not the day you get your quote. It's not the day you make your first payment. It's the day you hear that sickening crunch of metal, the shatter of glass, and your heart plummets into your stomach. In that moment, your insurance company transforms from a line item on your budget into the most important phone call you're about to make. And with Amica, that phone call is where the legend begins. For decades, Amica has built its reputation, its entire brand identity, on the foundation of its claims service. They consistently top the charts in J.D. Power's U.S. Auto Claims Satisfaction Study. We're talking year after year, earning a reputation for being the company that actually shows up when things go wrong. So, what does this legendary service look like in practice? Imagine that post-accident scene. You're shaken, maybe a little disoriented. You pull up the Amica mobile app. With a few taps, you start a claim. You can upload photos of the damage right there on the side of the road. You can document the other driver's information. Before the tow truck even arrives, the process has begun. Within hours, not days, you get a call. It's not from a generic call center. It's from your dedicated claims adjuster. This is a real person with a name, who will be your single point of contact throughout the entire process. This is one of Amica's biggest selling points. You aren't being bounced around from department to department, re-explaining the stressful details of your accident over and over again. You have one person, your person. They explain the next steps in plain English. They ask if you need a rental car and help you arrange it, often having it delivered directly to the body shop or even your home. They are calm, they are professional, they are empathetic. This is the white glove service Amica promises. For the vast majority of Amica customers who file a claim, this is their reality. The process is smooth, fast, and remarkably human. Adjusters are often praised for being proactive, calling with updates before you even think to ask for them. They work with your chosen body shop, approve repairs quickly, and issue payments promptly. Customers will use words like seamless, effortless, and compassionate. They'll tell you that Amica took a nightmare situation and made it manageable. They turned a customer into a lifelong advocate. This is the promise. This is the reputation. This is why people are willing to pay a premium for Amica. It's the peace of mind that when the worst happens, you won't have to fight the company that's supposed to be on your side. But what about the times it doesn't go that way? What is the dark side that I mentioned? Because beneath this shimmering surface of customer satisfaction, there are specific recurring issues that can turn that dream claims process into a frustrating, drawn-out battle. And the first and perhaps most painful one is the total loss nightmare. Let's say the damage to your car is severe. The adjuster determines it would cost more to fix your car than it's worth. It's declared a total loss. This is where things can get complicated. Amica, like most insurers, uses a third-party company, often one called CCC Intelligent Solutions, to determine your car's actual cash value, or ACV. This is the check they're going to write you. The problem is that number can sometimes feel shockingly low. You see, these valuation reports are based on an algorithm that scours databases for comparable vehicles that have recently sold in your area. But what if your car was in immaculate condition? What if you just put on brand new expensive tires? What if the comparable vehicles they found were base models, while yours was a fully loaded trim package? Suddenly, the fair market value they offer you isn't enough to buy a truly comparable car. It's not even close. And this is where the fight begins. You're now in the position of having to prove your car was worth more. You have to find your own comparable listings, you have to argue about trim packages, you have to debate the condition report. You're grieving the loss of your vehicle, and now you're haggling with an insurance giant over thousands of dollars. For many people, this experience feels like a betrayal. The compassionate adjuster who was so helpful at the beginning suddenly becomes a gatekeeper, defending a lowball offer generated by a computer. This is a well-documented point of friction, and if you're driving a car that's older or has unique features, you need to be prepared for this potential battle. The second major issue is the repair shop squeeze. Let's say your car isn't a total loss and it's going in for repairs. You want it fixed right. You want it to be as safe and reliable as it was before the accident. That often means using original equipment manufacturer, or OEM parts. These are parts made by your car's manufacturer, the exact same ones used to build your car at the factory. However, to control costs, Amica, like many insurers, will often push for the use of aftermarket or even salvaged parts from a junkyard. Aftermarket parts are made by third-party companies. While some are perfectly fine, others can have issues with fit, finish, and material quality. A non-OEM bumper might not line up perfectly, or a fender might use thinner metal. For critical safety components, this can be a terrifying prospect. This creates a conflict between you, your body shop, and Amica. Your body shop wants to use OEM parts to guarantee a quality repair. You, the owner, certainly want the best and safest parts, but Amica's estimate might only cover the cost of the cheaper aftermarket part. If you insist on OEM, you may have to pay the difference out of your own pocket. We're talking hundreds or even thousands of dollars. They are technically fulfilling their contract to restore your vehicle to its pre-loss condition, but the definition of that condition is where the debate lies. It's a cost-saving measure that can compromise the quality and safety of your repair, and it's a fight you might not even know you need to have until your mechanic points it out. Finally, there's the communication black hole. I know I just spent minutes praising their dedicated adjusters, and for most claims that holds true. But what happens when it doesn't? When a major storm hits a region, or during peak accident seasons, even the best staffed companies can get overwhelmed. And when an Amica adjuster gets overloaded with cases, that single point of contact can become a single point of failure. Suddenly, the proactive calls stop. Your emails go unanswered for days. You leave voicemails that are never returned. The body shop is waiting for approval on a supplemental repair. Your rental car coverage is about to expire, and you feel completely in the dark. This is perhaps the most frustrating experience of all. The initial promise of a smooth, personal process makes the eventual silence feel even worse. You go from feeling like a valued client to just another case number in a massive, overloaded system. While it's not the norm, it happens often enough that you'll find these stories of ghosting and unresponsiveness scattered among the glowing reviews. So you have this fundamental contradiction at the heart of the Amica claims experience. On one hand, you have a company with a well-earned stellar reputation for making a terrible situation as painless as possible. The potential for a truly exceptional white-glove experience is very real. But on the other hand, you have these specific, predictable trapdoors. The total loss valuation fight, the battle over OEM parts, and the risk of an overloaded adjuster going silent. These aren't just random, one-off complaints. They are systemic pressure points in the insurance industry's business model, where the need to provide great service clashes directly with the need to control costs and remain profitable. Knowing about these potential pitfalls doesn't necessarily mean you should run from Amica. What it does mean is you need to go in with your eyes wide open. You need to be prepared to advocate for yourself, to question the valuation report, and to have a serious conversation with your body shop about parts. But this entire high-stakes claims process begs a bigger question. What are you actually paying for this level of service, and is it worth it? Because Amica's unique pricing structure, its famous dividend program, and the discounts they offer are a completely different side of the story. One that's filled with its own surprising advantages and hidden costs that will directly affect your wallet every single month. Let's pull back the curtain on that pricing structure first, because it's the gatekeeper to everything else Amica offers. If you can't afford the price of admission, that legendary customer service we talked about is just a story you hear from other people. Now there's a persistent rumor about Amica, a piece of conventional wisdom that gets passed around online forums and neighborhood cookouts, that they are expensive. The Cadillac of insurance, as some people say. And to be brutally honest, for a lot of people that's absolutely true. You could get a quote from Amica that is hundreds, sometimes even $1,000 more per year than a quote from Progressive or Geico. It can be a real sticker shock moment. But here's the twist, and it's a crucial one. For a very specific type of customer, Amica isn't just competitive. It can be one of the cheapest options available. It's a paradox. So who are these people? Who is the ideal Amica customer that gets these surprisingly low rates? While Amica, like all insurers, keeps its exact algorithm under lock and key, decades of data and customer reports reveal a clear pattern. They heavily favor stability. They're looking for customers who are low risk not just on the road but in life. Think about it from their perspective. They are a mutual insurance company. That means the policyholders are the owners. They aren't trying to please Wall Street investors with explosive quarterly growth. They're trying to build a stable, profitable pool of low-risk members to keep costs down for everyone in the long run. So, they use their pricing to filter for that. This means they place an enormous weight on factors that other companies might not emphasize as much. Your credit score, for instance. With Amica, a stellar credit score isn't just a small bonus. It can be the single biggest factor in getting a fantastic rate. It signals financial responsibility, which they believe correlates directly with driving responsibility. Homeownership is another huge one. Owning a home in their eyes suggests stability, roots in a community, and a certain level of maturity. If you bundle home and auto insurance, you're even more attractive. They also look for long-term loyalty. Have you been with your previous insurer for 5, 10, or 15 years without any lapses in coverage? That's gold to Amica. It tells them you're not a high-risk jumper who switches carriers every 6 months chasing a slightly lower rate. You're a long-term prospect. So the ideal Amica customer might look something like this. A homeowner in their 40s or 50s, with an excellent credit score, a clean driving record, a history of continuous insurance coverage, and a desire to bundle multiple policies. If that sounds like you absolutely must get a quote from Amica because you might be shocked at how affordable it is. Conversely, if you're a young renter still building your credit, with a spotty insurance history or a recent accident, Amica's quote will likely feel punitive. They're not trying to be mean. Their algorithm is simply signaling that you don't fit their preferred risk profile. They've essentially priced you out of their club. This is the first and most important hidden cost of Amica. If you're not their target demographic, the cost is simply not being able to afford them in the first place. But let's say you do fit the profile and you get a quote that's competitive. This is where the second and perhaps most famous piece of the financial puzzle comes into play: the dividend program. This is one of Amica's signature features and a massive selling point. You'll see it advertised as getting money back from your insurer. And it's true. But the way it works is widely misunderstood. First, it's not a rebate and it's not a guaranteed discount. It's a dividend. Because Amica is a mutual company owned by its policyholders, when the company has a good year, meaning they took in more money in premiums than they paid out in claims and expenses. They share a portion of that profit back with their owners, the policyholders. This typically comes in the form of a check, mailed to you at the end of your policy term. For decades, this dividend has hovered around 20% of the annual premium. Let's be clear. That is a huge number. If your annual premium is $2,000, getting a check for $400 back feels incredible. Feels like a reward for being a good customer. Builds immense loyalty. Who else sends you money back? But, and this is a very big but, you have to look at the whole picture. The dividend is only available on certain policies. Typically, you have to buy a full coverage policy, not just state minimum liability. And most importantly, you must compare the net cost, not just the flashy dividend percentage. Let's run some simple real-world math. Suppose you get a quote from another reputable insurer, let's say State Farm, for $1,800 a year. Then you get a quote from Amica for the exact same coverage, but their price is $2,100. On the surface, State Farm is the obvious winner. It's $300 cheaper. But then you factor in Amica's historical 20% dividend. A 20% dividend on that $2,100 premium is $420. So, at the end of the year, Amica sends you a check for $420. Your actual net cost for the year with Amica was $2,100 minus $420, which equals $1,680. Suddenly, Amica is now $120 cheaper than State Farm. In this scenario, going with the higher initial premium from Amica was the smarter financial move. However, let's flip the scenario. What if State Farm quoted you $1,500 and Amica quoted you $2,000? Even with a 20% dividend from Amica, which is $400 back, your net cost is still $1,600. In this case, State Farm is still the cheaper option by $100. This is the calculation you have to do. You cannot be seduced by the promise of a big check in the mail a year from now. You have to compare the bottom line end-of-year cost. There's another hidden catch to the dividend program. It's not guaranteed. While Amica has a remarkable track record of paying it out year after year, it is entirely dependent on the company's financial performance. If they have a catastrophic year with massive claim payouts, say a series of major hurricanes in Florida or huge wildfires in California where they have a lot of policyholders, they could theoretically reduce the dividend percentage or even eliminate it for that year. It's a risk, albeit a small one based on their history. You are betting on their continued financial stability. It's also a cash flow consideration. With the cheaper competitor, you save money every single month. With Amica, you have to pay the higher premium all year long and then wait for your refund. For some people, having that extra money in their monthly budget is more valuable than getting a lump sum back later. So the dividend is a powerful tool, a genuine advantage for the right customer, but it's not magic. It's a math problem. You have to run the numbers for your specific situation. Don't just assume the dividend makes Amica cheaper. Calculate your potential net cost and compare it directly to other quotes. But the dividend is only half of the savings equation. The other half is a web of discounts, some obvious, some almost hidden. And it's in those hidden discounts, the ones most people never even think to ask for, where the real power to slash your premium lies, sometimes by hundreds of dollars a year. Let's start with the most common, the ones Amica practically puts on a billboard. You've got the multi-car discount. Obvious, right? You have 2 or more cars, you get a discount. But here's the detail people miss. It's not just for you and your spouse. It can often apply to any car garaged at your address. Your kid's car, the one they drive to college? Check. That classic car you only take out on Sundays? Check. Always list every vehicle at your address on the same policy. The savings compound. Next is the multi-line discount, also known as bundling. This is probably the single biggest discount available from any insurer, and Amica is no exception. You bundle your auto with your home, renters, or life insurance. The logic here for the insurance company is simple. A customer who trusts them with multiple policies is stickier. They're less likely to shop around every 6 months for a $20 savings on their auto insurance, if it means unbundling their home insurance and creating a massive headache. So, Amica rewards that loyalty and that stickiness with a substantial discount, often in the range of 15 to 25%. If you own a home and you're not bundling your home and auto, you are voluntarily lighting money on fire. It's that simple. Then there are the student discounts. You've got the classic good student discount. If you have a driver on your policy under the age of 25 who's a full-time student and maintains a B average or better, that's a discount. Why? Because the data shows a direct correlation between academic responsibility and driving responsibility. The student who studies for their calculus exam is statistically less likely to try and drift their Honda Civic around a wet corner. There's also a student away at school discount. If your kid goes to college over 100 miles away and doesn't take a car with them, you can get a massive price break. You're essentially telling Amica, this risky young driver won't be using the car for 9 months of the year, and they'll adjust your premium accordingly. Now let's move into the less obvious category. These are the discounts you have to be a little more proactive about. First, defensive driving courses. In many states, if you or another driver on your policy completes an approved defensive driving course, you're eligible for a discount that can last for 2 or 3 years. It might cost you $40 and a Saturday morning to take the course, but the discount could save you $100 a year every year. That's an incredible return on investment. Next, vehicle safety features. This is a big one that's constantly changing. It used to just be about anti-lock brakes and airbags. Now it's a whole different ballgame. Does your car have electronic stability control? Anti-theft devices like a LoJack or a factory-installed alarm? Lane departure warnings? Forward collision warning with automatic braking? These are all potential discounts. The insurance company's entire business model is based on predicting risk. A car that can prevent an accident from happening in the first place is a much better risk. But here's the catch. They don't always know you have these features. When you get a quote, you have to be your own advocate. Go down the list of features on your car's window sticker and make sure every single one is accounted for. And then there are the discounts that are almost hidden, the ones that reward a certain type of customer. Amica has a loyalty discount. The longer you stay with them, the more you save. It's not huge year to year, but after 5 or 10 years, it becomes a meaningful number that makes it harder for competitors to poach you. They also have discounts for being claim-free. Go 3 years without a claim? You get a discount. This is called the Good Driving History Discount. It's their way of rewarding you for not costing them money. There are also simple administrative discounts. Pay your bill in full at the start of the policy term instead of in monthly installments? That's a discount. Why? It saves them billing and processing costs, and it guarantees they get their money. Sign up for paperless billing and automatic payments? That's another discount. Again, it saves them money on postage and printing, and reduces the risk of a missed payment. These are small, maybe $5 or $10 a month, but they add up. Think about it. If you bundle, pay in full, go paperless, and have a good student on your policy, you've already stacked 4 discounts before even talking about your car or your driving record. But now we have to talk about the single biggest financial advantage of being an Amica customer. It's not technically a discount. It's something far more powerful. And it's the reason Amica has one of the highest customer retention rates in the entire industry. I'm talking about the dividend policy. This is a concept that is completely foreign to most people, because the vast majority of insurance companies don't offer it. Giants like Geico, Progressive, and Allstate are stock companies. They are owned by shareholders. Their primary fiduciary duty is to generate profit for those shareholders. When they have a profitable year, meaning they took in more in premiums than they paid out in claims and expenses, that profit goes to Wall Street. It goes to the investors. Amica is different. Amica is a mutual insurance company. That means it's owned by its policyholders. If you have a policy with Amica, you are a part owner of the company. So, when Amica has a profitable year, what do they do with the profits? They don't send them to Wall Street. They give them back to their owners. They give them back to you. This isn't a gimmick. It's a check that arrives in the mail. For decades, Amica has consistently paid out an annual dividend to its auto, home, and umbrella policyholders. This dividend is typically up to 20% of your annual premium. Let me repeat that. Up to 20% of the money you paid them all year is returned to you. Let's do the math. Say your auto premium is $1,800 for the year. A 20% dividend means you get a check for $360. Just for being a customer. If you have your home insurance bundled, and that's another $1,200, you could get a dividend on that too. Suddenly, you're looking at a check for hundreds and hundreds of dollars. This completely changes the calculation of what you're actually paying for insurance. Your effective premium becomes dramatically lower than the number you see on your bill. Now, Amica is very clear that this dividend is not guaranteed. It depends on the company's financial performance. If they have a catastrophic year with massive claims, say a series of major hurricanes, the dividend could be reduced or even eliminated. But historically, their track record is incredibly strong. They have paid out a dividend every single year for over a century. It's the cornerstone of their business model. This is the ultimate loyalty program. It creates a virtuous cycle. Because customers know they might get a big check at the end of the year, they're more likely to stay with Amica, even if a competitor offers a slightly lower quote. This high retention rate means Amica spends less money on advertising and marketing than their rivals. They don't need a cartoon gecko or a quirky spokesperson because their best marketing tool is a dividend check with their customer's name on it. That lower overhead then contributes to their profitability, which in turn helps fund the next year's dividend. It transforms your relationship with the company. You're not just a customer, you're a member. You are financially invested in the company's success. You want them to be profitable because their profit is your dividend. It's a fundamental structural advantage that most people don't even know exists when they're shopping for insurance. They just compare the top-line premium numbers, but they're missing the secret 20% refund that happens on the back end. So when you combine the robust, stackable discounts with the potential for a massive annual dividend, the financial proposition of Amica becomes incredibly compelling. It's a two-pronged attack on the cost of insurance. First, you use the discounts to lower your initial premium as much as possible. Then, the dividend policy gives you a refund on that already lower price. But all of these discounts and dividends are meaningless if the starting price is sky-high to begin with. A 20% discount on an outrageously expensive policy still makes it an outrageously expensive policy. So the critical question remains, how does Amica's base premium, the price before all the bells and whistles, actually stack up against the Goliaths of the industry? Is it competitive, or are you paying a premium for the promise of a dividend? That's where we need to dig into the numbers. So let's do it. Let's pull back the curtain on the pricing Wizard of Oz. Now, comparing car insurance quotes is notoriously tricky. It's not like buying a gallon of milk where the price is the price. Your rate is a complex cocktail of your age, your driving record, your zip code, your credit score, the car you drive, even your marital status. A price for me is not the price for you. So to make this a fair fight, we can't just pull one number out of a hat. We need to create a few typical American driver profiles and run them through the gauntlet, pitting Amica against some of the household names: Geico, Progressive, and State Farm. First up, let's meet City Sarah. She's 24, single, and rents an apartment in a dense urban area like Chicago or Boston. She has a clean driving record, which is great, but her age and location work against her. She drives a 2018 Honda Civic, one of the most common cars on the road. We're looking for a standard policy: liability, collision, and comprehensive. For Sarah, the results were eye-opening. Geico and Progressive, the kings of direct-to-consumer marketing, came in the lowest. They are built to be hyper-competitive for this exact demographic, the young tech-savvy driver who shops online. They came in around $1,800 for a 6-month policy. State Farm was a bit higher, closer to $2,000. And Amica? Amica was the most expensive of the bunch, quoting Sarah nearly $2,300. That's a $500 difference from the cheapest option. For a 24-year-old, that's not pocket change, that's a make-or-break number. So what's going on here? It suggests that Amica's pricing model doesn't aggressively target young, single drivers in high-risk urban environments. They aren't trying to win the race to the bottom for this segment. Their underwriting, the process they use to assess risk, likely sees Sarah's profile as less stable and more volatile than their ideal customer. The takeaway for young drivers is stark. While Amica's service is legendary, you will likely pay a significant premium for it. A premium that the dividend check at the end of the year is unlikely to erase. But let's change the profile completely. Now let's look at the Miller family. They're in their late 30s, married with 2 kids, and live in a suburb outside of a city like Dallas or Atlanta. They own their home, have excellent credit, and 2 cars to insure: a 2021 Toyota Highlander and a 2019 Honda Accord. Both have spotless driving records. This is the demographic sweet spot for insurance companies. They are seen as stable, responsible, and profitable. And here the entire story flips on its head. When we ran the quotes for the Millers bundling their home and auto insurance, the numbers looked completely different. Geico and Progressive were still competitive, but their edge vanished. They quoted the Millers around $1,400 for a 6-month auto policy. State Farm was in the same ballpark, just a hair over at $1,450. But Amica? Amica came in at $1,500. Now wait, you're thinking. That's still the most expensive. And on paper, you're right. It's $100 more than the cheapest quote. But this is where the dividend policy, the one we talked about earlier, becomes a game changer. Amica's dividend payout has historically averaged between 5 and 20% of the annual premium. Let's be conservative and call it 15%. The Miller's annual premium is $3,000. 15% of that is $450. When you get that check back at the end of the year, their effective annual cost isn't $3,000, it's $2,550. All of a sudden, Amica isn't the most expensive option. It's the cheapest. By a significant margin. It's nearly $300 cheaper than Geico or Progressive. This is Amica's secret weapon. They price competitively for their target market, stable, multi-policy households, and then the dividend acts as a powerful loyalty incentive that transforms a decent price into a fantastic one. Finally, let's check in on retired Robert. He's 67, lives in a quiet town in Florida, and is a widower. He has a perfect driving record stretching back decades, excellent credit, and drives his 2017 Toyota Camry less than 5,000 miles a year. He's the definition of a low-risk driver. For Robert, the pricing was incredibly tight across the board. All the companies want his business. The difference between the highest and lowest quote was less than $100 for a 6-month policy. Geico, State Farm, and Progressive were all clustered around the $500 mark. Amica was right there with them at about $520, again slightly higher on the front end. But for Robert, the calculation is different. The potential $150 dividend check at the end of the year certainly makes Amica the cheapest option financially. But at this stage in life, the decision might not be purely about the bottom line. For someone like Robert, who values simplicity and reliability, the promise of a hassle-free claims experience might be worth more than a few dollars. He's not looking for the cheapest option. He's looking for the best option, the one that won't give him a headache if something goes wrong. Knowing he can call a dedicated representative who will handle everything smoothly is a powerful selling point that transcends the raw numbers. Amica's price here is competitive enough to get them in the door, and their reputation for service is what seals the deal. So what does this all tell us? It proves that Amica is not playing the same game as the high-volume, low-margin giants. Their base premium is not designed to be the absolute cheapest for everyone. If you are a young, single renter in a big city, Amica's price might seem astronomical. They have effectively priced themselves out of that market. But if you fit their target profile, a homeowner perhaps with a family, good credit, and a clean record, their pricing is not just competitive. It's often better once you factor in the reality of the dividend. You're not just paying a premium for a promise. For the right customer, you're paying a comparable premium for a superior service model, with a system of shared earnings that often results in you paying less in the long run. The initial quote is only the beginning of the story. It's an invitation to a different kind of insurance relationship. The question is, are you the kind of customer they're inviting? The base premium is one thing, but the modern insurance game is won and lost on discounts. This is where the price gets sculpted. And while Amica offers the standard discounts you'd expect, they have some powerful, unique offerings, and some truly baffling gaps in their discount list that could leave hundreds of dollars on the table. We need to break down that list piece by piece to see if you can truly maximize your savings. So let's start with the most glaring omissions, the discounts you see almost everywhere else that Amica simply doesn't prioritize. The first major gap is in professional affiliations. Think about it. Geico famously offers discounts for federal employees. USAA is built entirely around serving the military. Countless other insurers offer special rates for teachers, nurses, or first responders. With Amica, that list is shockingly short. If you're banking on your career as a decorated veteran or a dedicated teacher to knock a percentage off your premium, you will likely be disappointed. For Amica, your profession is largely irrelevant to their pricing model, which can feel like a slap in the face if you're used to being rewarded for your service. The second baffling gap is the inconsistent and almost shy approach to telematics. We live in the age of data. Progressive has Snapshot, State Farm has Drive Safe and Save. These programs are front and center, promising huge discounts if you just let them monitor your driving through an app. They gamify safety. Amica, well, they have a program called Street Smart, but its availability is limited and it's not the core of their marketing. They aren't shouting from the rooftops that you can save 30% by proving you're a good driver. It feels like an afterthought, a reluctant concession to a trend they'd rather ignore. For the tech-savvy driver who wants to be actively rewarded for their safe habits in real time, this is a massive missed opportunity. You can't just download an app and immediately start earning a discount in most states. It's a friction point that their biggest competitors have long since smoothed over. But here is the critical turning point in understanding Amica's philosophy. What they lack in a broad, checklist-style discount menu, they attempt to make up for with incredible depth in one specific area: loyalty. This isn't just a buzzword for them. It is the absolute bedrock of their discount structure. Most companies offer a loyalty discount, sure. Stick with them for 3 years, get a measly 5% off. It's token appreciation. Amica treats loyalty like a long-term investment. Their loyalty discount isn't a static number. It's a living thing that grows the longer you stay with them. After 2 years, you get a discount. After 5, it's larger. After 10, larger still. They are playing the long game. They are actively trying to make it financially unwise for you to leave them after you've been a customer for a significant period. It's a powerful retention tool. And for the consumer who hates shopping for insurance every year, it's a golden handcuff that actually feels good to wear. This obsession with loyalty creates perhaps their most unique and valuable discount, something many people have never even heard of: the legacy discount. This is Amica's secret weapon for multi-generational families. Here's how it works. If your parents have been Amica Auto policyholders for at least 5 years, when you, their child, go to get your own policy, you can inherit their loyalty status. Let that sink in. You're 25 years old, you've moved out, you're buying your first car. Normally, you'd be facing astronomical insurance rates. But because your mom and dad have been with Amica since you were in high school, you get a significant discount right out of the gate. You're treated not as a new high-risk customer, but as a continuation of a trusted relationship. It's a brilliant strategy that fosters immense goodwill and captures entire families for life. For any parent with an Amica policy and kids approaching driving age, this discount alone can be a deciding factor that saves thousands of dollars over the years. Then there's the claim-free discount. Now this sounds like a safe driver discount, but it's subtly different and more generous. A safe driver discount usually looks at your MVR, your motor vehicle record. No tickets, no at-fault accidents. The claim-free discount is simpler. Have you cost Amica money? If you haven't filed a claim for a certain number of years, typically 3, you get a discount. This means that even if you got a minor speeding ticket, as long as it didn't result in a claim, your discount remains intact. It rewards you not just for driving well, but for being self-sufficient and not leaning on your policy for every little scratch and ding. Beyond these big, unique discounts, they have the foundational pillars you'd expect. The multi-line discount, or bundling, is their bread and butter. Combining auto and home or renters or condo insurance with Amica is where the savings truly begin to cascade. Their internal data clearly shows that a bundled customer is a stickier, more profitable customer, so they incentivize it heavily. If you are only getting an auto quote from Amica, you are not seeing the real picture. Their best rates are reserved for the person who is willing to put all their eggs in the Amica basket. This is non-negotiable if you want their best price. From there, you can stack the more conventional discounts. The multi-car discount is standard. The good student discount is there for young drivers with a B average or better, and the student away at school discount provides relief for parents whose college kid left their car at home. You can get a discount for completing an approved defensive driving course, which is an easy win for mature drivers looking to shave off a few percentage points. And they still have the old-school, hardware-based discounts that many newer companies have started to phase out. You get a discount for passive restraints. That means airbags and automatic seat belts. You get a discount for having an anti-theft device, whether it's a simple alarm or a more advanced tracking system. These might seem small, but they add up. They're part of the no-brainer category of savings. Finally, there are the financial management discounts. Paying your premium in full at the beginning of the term instead of monthly will always net you a significant savings. It saves them administrative costs, and they pass that savings to you. Similarly, signing up for autopay and paperless billing will knock a little more off the top. These are the easiest discounts to get. It's free money you're leaving on the table if you don't select them. So when you piece it all together, a very clear picture of the ideal Amica customer emerges. It's not the person looking to hop between insurers every 6 months for the latest promo code. It's not the gig economy driver who wants an app to track their every move for a discount. And it's not the person who defines themselves by their profession. The customer who wins with Amica is the one who values stability. It's the homeowner who can bundle and unlock the biggest multi-line savings. It's the family who can pass down a legacy discount to their children like a financial heirloom. It's the person who plans to stay put for 5, 10, 20 years, allowing that loyalty discount to mature and compound into something truly substantial. Amica's discount structure isn't a buffet with endless options. It's more like a prix-fixe menu, carefully designed to reward a very specific type of diner. If you fit that profile, the meal is exquisite and surprisingly affordable. But if you don't, you might find yourself looking at the menu and wondering why you're paying so much for a plate of things you don't actually want. The key is knowing which type of customer you are, and whether their vision of loyalty aligns with your own financial strategy. This brings us to the most crucial question of all. Who is Amica really for, and more importantly, who is it absolutely wrong for? Let's break this down into a few distinct profiles because the truth is, Amica is an exceptional choice for a specific type of person, and a downright poor choice for another. Understanding which one you are is the key to this entire puzzle. First, let's meet the ideal Amica customer. We'll call this person the planner. The planner isn't defined by age or income, but by a mindset. They likely own their home or are on a stable path to do so. They have a good, maybe even excellent credit score. Their driving record isn't just clean, it's uneventful. They haven't had an at-fault accident in years, maybe ever. They see insurance not as a burdensome monthly bill, but as a critical component of their overall financial security plan. For the planner, the absolute lowest price is not the primary goal. The primary goal is value, and value is a combination of price, service, and, most importantly, peace of mind. This is the person who, when a hailstorm totals their car, doesn't want to spend 3 weeks arguing with a claims adjuster over the definition of market value. They want a single phone call, a compassionate and competent agent, and a check that arrives promptly. They are willing to pay a slight premium for that white glove service. Think of it like this: you can buy a $10 watch that tells time, or you can buy a $500 watch that also tells time. The person buying the more expensive watch is paying for craftsmanship, reliability, and the assurance that it won't fail when they need it most. That's the Amica customer. They are also the customer who benefits most from Amica's structure. Because they bundle home and auto, they unlock the best possible discounts. Because they plan to stay for years, the loyalty credits start to accumulate. And most critically, because they are a shareholder in the company through their dividend-eligible policy, they are literally invested in the company's success. The annual dividend check they receive isn't just a nice surprise. It's a tangible return on their decision to be part of a select, low-risk pool of customers. For the planner, Amica isn't just an insurance company. It's a financial partner that aligns perfectly with their long-term, stability-focused worldview. They're not just buying a policy, they're buying into a philosophy. Now, let's look at a different profile. The price-sensitive professional. This might be a recent college graduate with a good job, or a young family just starting out. They have a decent driving record, maybe one minor speeding ticket from a few years ago. They're responsible, but they're also building their savings, paying off student loans, and watching every dollar. For them, the budget is tight. For this person, Amica is a maybe. It's an aspirational choice. They'll hear about the legendary customer service and the dividend checks and be incredibly tempted. They'll go online and get a quote. And that's where the hesitation will begin. The quote will likely be higher, maybe 10 to 20% higher, than what they could get from a company like Geico or Progressive. And a 20% difference could mean an extra $40 or $50 a month. Money that could go toward a student loan payment or into a retirement account. The math for the price-sensitive professional is complicated. They have to weigh the tangible, immediate savings from a cheaper competitor against the intangible, future benefits of Amica. Will the potential dividend check at the end of the year make up for the higher monthly premium? Maybe, but it's not guaranteed. Is the superior customer service worth an extra $500 a year? That's a tough question to answer when you haven't had to file a claim in 5 years. This customer is caught in the middle. They value quality, but they are constrained by cost. For them, the decision often comes down to getting quotes from both Amica and its competitors and doing a very honest, soul-searching calculation. If the price difference is minimal, Amica is probably the smarter long-term play. But if the gap is significant, it can be very difficult to justify the higher upfront cost, no matter how great the service promises to be. Finally, we have the profiles for whom Amica is, to be blunt, a terrible fit. It's a waste of their time and Amica's. First and foremost is the high-risk driver. This is anyone with a recent DUI, multiple at-fault accidents, a handful of speeding tickets, or a significant lapse in coverage. Amica's entire business model is built on a foundation of careful risk selection. They are like a very exclusive club. And a poor driving record is the fastest way to get your application denied at the door. They don't have competitive programs for SR22s or special policies for drivers with major violations. Why? Because insuring high-risk drivers is expensive. It leads to more claims, higher administrative costs, and greater unpredictability. By avoiding this segment of the market entirely, Amica protects its existing pool of low-risk policyholders, keeping their collective claims low, which in turn allows the company to pay out those famous dividends. So if you have a checkered driving past, Amica simply isn't built for you. You'll need to look at companies that specialize in non-standard or high-risk insurance. Next up is the rate hopper. This person is the polar opposite of the planner. Their loyalty is to one thing and one thing only, the lowest possible price right now. They have a calendar reminder set for every 6 months to shop for new insurance. They'll switch companies to save $10 a month without a second thought. For this customer, Amica makes 0 cents. Their initial quote will almost never be the rock-bottom cheapest on the market. Furthermore, Amica's greatest financial benefits, the loyalty discounts and the compounding effect of dividends, only kick in after you've been a customer for a while. The rate hopper will never stay long enough to see these benefits. They are playing a short-term game of arbitrage, while Amica is built for a long-term relationship. It's a fundamental mismatch of strategy and philosophy. And one last, very modern profile: the heavy gig worker. This is the person who uses their personal vehicle extensively for rideshare services like Uber or Lyft, or for delivery services like DoorDash or Instacart. The line between personal and commercial use of a vehicle gets incredibly blurry here. While many major insurers have adapted by offering specific rideshare endorsements or policies, Amica has been much more traditional and cautious. Their standard personal auto policy is not designed to cover the high mileage, high-risk nature of commercial driving. Trying to get coverage can be difficult, and if you're not fully transparent about your gig work, you risk having a claim denied entirely, which could be financially catastrophic. If your car is your primary tool for making money in the gig economy, you need a specialized policy, and Amica is likely not the place to find it. So you have to ask yourself, are you looking to rent your insurance coverage for the lowest possible price, or are you looking to invest in a long-term financial partnership? The answer to that question will tell you almost everything you need to know about whether Amica is right for you, and it sets the stage for our final verdict. So let's break that down. We're going to create 3 hypothetical drivers. Let's call them Sarah, Mike, and David. By the end of this, you'll know exactly which one you are, and you'll have your answer about Amica. First, meet Sarah. Sarah is in her late 40s. She owns her home, has a stable career, and has been driving for over 20 years with a clean record. Not a single at-fault accident. She's bundled her home and auto insurance for years with another major carrier. But their rates keep creeping up, and the one time she had to file a claim for a cracked windshield, the process was a bureaucratic nightmare. Sarah isn't looking for the rock-bottom, bare-bones, cheapest possible insurance. She's looking for a company she can trust. She wants to know that if the worst happens, a major collision, a total loss, she won't be fighting with a call center representative who's reading from a script. She wants a partner. For Sarah, Amica is not just a good choice, it's arguably the perfect choice. The slightly higher premium she might pay up front is, for her, an investment in peace of mind. She understands the value of paying a little more for a premium product. When she gets that dividend check at the end of the year, it won't just be a nice bonus. It'll be a confirmation that she made the right decision. It's tangible proof of the company's financial health and its commitment to policyholders. Amica's stringent underwriting means she's in a pool with other drivers just like her. Responsible, stable, and low risk. This is why their claims process is so smooth and why they can afford to pay those dividends. For Sarah, Amica is the destination, not a stepping stone. It's the company she'll likely stick with for the rest of her driving life. Now let's talk about Mike. Mike is 25. He's renting an apartment, he's just starting to build his career, and his budget is tight. He drives a reliable but older used car, and his primary concern is his monthly cash flow. He's tech-savvy and has no problem spending an hour every 6 months shopping for new quotes online to shave $20 off his bill. He sees insurance as a necessary evil, a commodity. The lowest price wins, period. For Mike, Amica is almost certainly the wrong choice. When he gets a quote, he's going to experience sticker shock. He'll see Amica's price next to a quote from a company like Geico or Progressive and wonder why anyone would pay that much more. He doesn't care about J.D. Power Awards from 15 years ago. He cares about his bank account today. The concept of a future dividend check is too abstract to justify a higher immediate cost. Furthermore, because he's younger and has a shorter credit and driving history, Amica's underwriting might view him as a higher risk, inflating his quote even more. Mike's best strategy is to leverage the hyper-competitive market of insurers who fight tooth and nail for his business on price alone. Amica doesn't play that game. They aren't trying to be the Walmart of insurance. They're the boutique, high-end specialist. For Mike, trying to fit into the Amica model would be like insisting on buying organic, farm-to-table groceries on a ramen noodle budget. It just doesn't make financial sense. Finally, we have David. David is in his early 30s and he's had some bad luck. He got a DUI 5 years ago. He's worked hard to turn things around, but it's still on his record. He also had an at-fault fender bender 2 years ago. He's a good person who made mistakes, but in the eyes of an insurance underwriter, he is a flashing red light. A high risk. For David, Amica isn't just a bad fit. It's likely not an option at all. When he applies, he'll either be flat-out denied or given what's known as a go-away quote. A price so astronomically high it's the company's polite way of saying, please, don't become our customer. Amica's entire business model is built on insuring the Sarahs of the world. By avoiding high-risk drivers like David, they keep their claims costs low, their financial reserves high, and their existing policyholders happy. This isn't a moral judgment on David. It's a cold, hard, calculated business decision. David's best bet is to look for companies that specialize in high-risk or non-standard insurance. He'll have to pay more, but he can find coverage. After several years of clean driving, he might be able to reapply to standard carriers, but Amica, with its incredibly low tolerance for risk, will likely be the very last door to open for him if it ever opens at all. So who are you? Are you Sarah, the long-term investor in quality? Are you Mike, the savvy, price-driven shopper? Or are you David, working to rebuild your driving record? Here is the final verdict on Amica, distilled down to its essence. Amica is one of the best insurance companies in the United States, but only for a very specific slice of the population. It is for the financially stable, the responsible, the people with clean records who view insurance not as a monthly expense to be minimized, but as a critical component of their financial security. The high price tag isn't a flaw in their model. It's a feature. It's the barrier to entry that keeps the risk pool clean. The legendary customer service isn't a coincidence. It's the direct result of having the financial freedom to treat customers right, a freedom earned by not having to deal with a high volume of claims from risky drivers. And that dividend? It's the ultimate reward for being part of that exclusive club. It's the company literally sharing its profits with you, its owner. Think about that. Over a 20-year relationship with Amica, those dividend checks, which historically average between 5 and 20% of your annual premium, could add up to thousands and thousands of dollars. We're talking about a sum that could effectively erase several years of your premium payments. When you factor that in, the initial high cost starts to look very different. It's not just money spent. It's money invested in a system designed to give back. So if you are a Sarah, your homework is simple. Get a quote from Amica. And when you do, don't just compare the premium to your current insurer. Ask yourself what it would be worth to never have to worry about your insurance company again. What is the dollar value of peace of mind? If you are a Mike, your path is also clear. Embrace the digital marketplace. Use online comparison tools. Make insurance companies fight for your business every 6 months. Your best weapon is your willingness to switch, so use it. Amica isn't for you right now, and that's perfectly okay. And if you are a David, be patient. Focus on safe driving. The single most important thing you can do is let time pass without any new incidents. Your rates will come down, more options will become available, and you'll regain control over your insurance future. In the end, Amica is a throwback. In an industry that has become obsessed with funny mascots, 15-second ads, and a race to the bottom on price, Amica stands apart. They are a quiet, confident, and unapologetically premium brand. They don't need to shout, because their reputation, built over more than a century, speaks for itself. They are not trying to be the insurer for everyone. They are trying to be the best insurer for someone. And if you are that someone, you may have just found your forever insurance company.